Yes, sir. Yo, what is going on, guys? Welcome to another video. In today's video, we are actually going to talk about stocks, macroeconomics, and kind of all the news and different things like that that have basically come out today and pretty much this week. And yeah, let's just go ahead and get right into the video. So first off, it is very important for you guys to understand this. And I've said this so many times. Don't get caught up in these bear market rallies, right? We know for a fact 100% we are in a bear market. Every time the market goes up, I start seeing people on social media or commenting on my videos. The market's back. The bull market's back. Everything to the moon. You got to understand the trend. Remember, the market doesn't just go straight down. It does the little roller coaster thing, right? So the market will, in a bear market especially, it'll go down, it'll go up, right? Like it'll have a strong rally to the upside, and then it'll go down and like make a new low. Like you'll start seeing things like that. And it's just important for you to understand one simple thing. When you look at the S&P 500 and the NASDAQ, what are you seeing? You are seeing lower lows and lower highs. The highs that you see are lower than they were last month. The lows that you're seeing are lower than they were last month. It's extremely important you guys understand that. So don't get caught up in the hype. I've been saying this in my videos for a while. Do not expect to make money in the stock market this year. That's all I've been saying. Now, the money will be made in the years to come, no doubt. But we're in a bear market right now. So this is the time to accumulate assets and things like that at cheap valuations and at good prices. You guys know me. I mostly recommend the S&P 500. So now let's go ahead and actually get into what exactly is going on. So here's what we had, right? You got the article right here from Bloomberg. The United States added 372,000 jobs in the month of June. This actually exceeded expectations. Average hourly earnings month over month came in at 0.3%, which was expected. Non-farm employment change came in at 372,000. This is much higher than the expectations, which was 275K. The unemployment rate actually comes in at 3.6%, which is actually pretty good, to be honest. It's surprisingly good. And the reason why all of this matters and why I think the market probably doesn't like this is because this actually does give the green light for the Fed to raise rates another 75 basis points. As a matter of fact, it actually looks like the Fed was kind of right when they said that the labor market is strong. And so now that the Fed seems to be right about that, this gives them pretty much everything they need to go ahead and raise rates. And like I said, the reason for this is because you're seeing strong economic data on top of persistent inflation expectations. And yeah, that pretty much gives the Fed everything they need, all the reason to raise rates 75 basis points in their next FOMC meeting. So that's pretty much what's going on. Now, in terms of CPI, I want to discuss that too, guys, because it's important that you guys understand what UBS said. And for those who don't understand, the reason why I'm specifically highlighting UBS here is because UBS has been so accurate on these CPI prints. They've basically virtually gotten all of them right. It's actually been quite incredible. Like they've accurately predicted almost every single CPI print. So UBS's opinion matters a lot. As a matter of fact, their prediction matters a lot. So they actually said, matter of fact, let's just go to it. We're going to read it. It says right here, this is a note from UBS. They said next week, CPI for June will be released, and we expect to see another new 40-year high in the headline inflation rate. This is likely to keep pressure on the Fed to hike by another 75 basis points at the next FOMC meeting on July 27th. Now, it's very weird that the FOMC and the Fed are having their meeting before the GDP print. I have no idea why they do that. I don't know whose idea that was, but that doesn't make any sense because basically, the next day, you have the Q2 GDP print, which will officially find out if we're in a recession. So I have no idea why the FOMC meeting is a day before. It makes no sense to me, but whatever. UBS is predicting that we are going to reach another 40-year high. So that kind of makes me think we might actually get a 9% inflation print. However, I will be honest, guys, gas prices have finally gone down a little bit. At least that's what I'm noticing. But I know that CPI is from last month. So UBS is more than likely right. As a matter of fact, they probably are because it's freaking UBS. Here's the last thing I wanted to talk about, guys. We're actually going to pivot into some crypto news. So Voyager Digital has more drama going on with them. Now, this piece of news isn't being covered as much as I think it should, because this is actually extremely important. So what's happening is the Federal Deposit Insurance Corporation, otherwise known as the FDIC, is taking a close look at claims by crypto broker Voyager Digital that its customer accounts were protected by that U.S. agency in the event of a company collapse. This was confirmed by an agency spokesperson. Now, what's so interesting about this, I know many of you guys know because I've covered this in quite a few videos now. Voyager Digital actually did tweet, and they had in their terms of service that basically your money is FDIC insured, not your USD. Let me be very clear, not your crypto, not your stable coin, but your actual USD, your fiat money in Voyager Digital is insured by the FDIC up to $250,000. That's actually incorrect, and I uncovered this in one of my earlier videos. You're free to check that out, where we actually brought up the fact that the New York-based Metropolitan Commercial Bank, which is who Voyager basically banks with, actually came out with a statement and said that is actually incorrect. We basically don't care about Voyager. Matter of fact, let me read you what the statement said. The Metropolitan Commercial Bank of New York actually said FDIC insurance does not protect against the failure of Voyager, any act or omission of Voyager or its employees, or the loss in value of cryptocurrency or other assets. So again, you can read it for yourself. It says right there, FDIC insurance does not protect against the failure of Voyager. As a matter of fact, what FDIC insurance does, guys, is it actually protects in the event that the bank fails. So if Metropolitan Commercial Bank of New York fails, then yes, your money is insured up to $250,000 by the FDIC. But if Voyager fails, your money is not insured. The Metropolitan Bank made that very clear. And so the FDIC is kind of investigating this because the FDIC is kind of looking like, wait a minute, did you mislead investors? And to be honest with you guys, it's kind of looking like Voyager Digital misled investors. That's honestly what it's looking like. So that's very scary. Now, let me read this note from CoinDesk. An FDIC spokesperson told CoinDesk that Voyager Digital is not a bank or savings association and therefore not qualified for FDIC insurance. So there you guys have it. That is from the FDIC, a government agency themselves. So I know I had some debate on my videos like, oh, you're wrong. Voyager Digital is FDIC insured. Like, no, actually, no. The FDIC spokesperson just came out and said that Voyager does not qualify for that. So yes, your money is not FDIC insured on Voyager. Case closed. It also says here, Voyager customers are not protected against the crypto broker's default, bankruptcy, withdrawal, suspension, or if its assets lose value. Voyager's customers can reach out to the FDIC if they have any further questions. And so, yeah, there you guys go. So that's more to the crypto saga. But anyway, I'll go ahead and keep this video short. Obviously, everybody knows about all the events that took place yesterday and all the craziness and different things like that. Obviously, there's not a lot I can say regarding that, but all I can say is I appreciate every single one of you who reached out, sent me a DM, showed support. Really thank you guys so much. Can't thank you enough. At the end of the day, what matters is the truth, and I'm going to continue to tell the truth because that is what we do on this channel. And there you guys have it. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.